Hello, everyone, and welcome to another Wednesdays with Wendy, where we make small business ownership less stressful, one step at a time. Today, we are going to talk about the One Big Beautiful Bill Act. It's also known as OBBB or OB3. I'm sure you've heard of it. It's the most recent tax law update that Congress has passed. And we're going to talk a high level overview about how it affects small business owners. A quick disclaimer, this is not tax advice. If you have specific tax questions, you need to reach out to a licensed tax preparer who can look at your personal tax situation, your business tax situation, and give you accurate answers based on those things. This video does not do that. We're talking about the bill. We're going to talk high level overview, just some things to be aware of. And we're not even going to go that in depth here because I'm going to keep this under 10 minutes, and that's a stretch for tax stuff. So anyway, with that disclaimer, hi, my name is Wendy. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, so one big beautiful bill. I'm sure you've heard of it. I'm sure you've thought, oh gosh, they're changing the tax bill again. Um, this happens every so often. What the way tax bills work is that in order to get the bill passed, they sometimes have to compromise on positions. Maybe not that they do that anymore, but we hope. Anyway, to get some things passed, they have to make something. They change the law, but only for the next 3 years, or they change the law, but only for this amount of people, not these, that type of thing. So this bill changes, it makes a lot of things that were temporary a few years ago, it makes them permanent. So that could be good for you, and maybe it's not, but again, reach out to your tax preparer. I can't tell you in this video if that's a good thing or a bad thing. I just know that's what we're talking about. So let's talk high level. What does this bill do? First, you may have heard this, no tax on tips. They did it. They actually put in a provision where you will not get taxed on tips if you are in an occupation that is customarily tipped. Okay, so there is a list of jobs and occupations that normally get paid in tips, and only those occupations can claim this deduction. And it's a deduction, so you're still going to have to put it on the W-2, but then you'll deduct it on your taxes. There's a limit of $25,000 per year. So if you are a small business owner and you thought, oh, I know what I'm doing, I'm going to pay all of my employees in tips. Therefore, they won't owe any taxes on their income. Well, sorry, but the IRS figured that out, as did Congress, and they won't let you do that. As I tell people with tax preparation and tax law, I'm like, listen, it is never that simple. Okay, there's the law and the exceptions and the rules and the exceptions to the exceptions, and it can be quite maddening when you actually go through it. All right. Overtime, no tax on overtime. That is true as well. You should reach out to your payroll company because the employer has to furnish a statement to the employee showing how much of their pay was overtime and how much was not. The payroll companies have this because when you enter hours, if you were an hourly worker and earned overtime, when you enter that in the payroll software, they have a spot for regular hours and a spot for overtime. So reach out to your payroll company. If they haven't reached out to you already, they should be providing you with a statement showing how much was overtime, how much was regular, so that you can provide that to your employees. It may also be on the W-2. I haven't looked specifically at how that's going. Okay, let's see. Car loan interest, they are going to allow us to deduct above the line car loan interest. Now, this is on your personal tax return. It's not necessarily a business related thing, but if you're a business owner and you have a car, you may want to consider keeping it in your personal name so that you can deduct the interest on your personal taxes. There may be some ways to get it on the business return, and if you have it on the business already and take mileage, that might be a better deduction than the car loan interest. You will just have to sit down with a tax preparer and do the math to see which way works best. But there's a $10,000 limit on the car loan interest, so that's an awful lot of interest. I kind of hope you're not paying that. But if you are, it's available and you should look into that. Let's see, bonus depreciation. Now we're getting into really accounting like tax topics. I won't bore you with what that is, but so depreciation, just as a reminder, if you buy a piece of equipment and it's supposed to be good for about 10 years and it costs $10,000, the idea is that, okay, you're going to deduct $1,000 each of the 10 years until its book value is zero. That is way oversimplified. There's a lot more calculations that go into depreciation. They have made bonus depreciation permanent, so you could potentially take 100% of the cost, like the whole 10,000. You could potentially deduct that all this year. There are rules. Again, it's never that simple. Please reach out to your tax preparer if you have questions. Let's see. SALT. This is SALT, state and local taxes. These are estimated taxes. If you pay estimated taxes to your state, if you are a single member LLC, if you're an S Corp owner, you still may pay estimated taxes. If you don't have enough withheld through your paycheck, you may still be paying estimated taxes. One smart tax strategy is to pay any to your state by December 31st, because then you can deduct those on your 2025 tax return. Now, it's an itemized deduction. So if you remember itemized versus standard, itemized, you have to have it's a higher amount. If that amount is higher than standard deduction, you can take the higher amount, but it's just one thing in the bucket. You got to have other deductions to get up there and make that worth your time. Again, reach out to your tax preparer. I can't stress that enough. And let's see. Also, if you have an S corp and you're doing the pass-through entity tax where the S corp pays the taxes, also pay those before December 31st, and that might help you out on your federal tax return for 2025. Let's see. That's all the topics I'm going to cover this week. The next few weeks, I'll go more in depth on each of those topics, not super in depth, because again, you're not accountants, you're not tax preparers, you don't need to know all the nitty gritty and the code sections and the exceptions to the exception. No one wants to do that. But I will explain it a little more just to give you an example of some things and, just to give you an idea if you're interested in how is this going to work? Because on the one hand, yes, they promise these things, yes, they're happening, but as always, it's never that simple. You have to be careful because what in your head, what no tax on these things mean may not be what the government means. All right, that is it for this week. Remember, no one is born knowing how to do this. That's for sure true on taxes, and it is not taught in school. That's true as well. If you're feeling lost and overwhelmed, you are not alone. That's why I'm here to help you, not me. Go to my website and sign up for my newsletter, book a consultation if you have any other questions, and y'all have a good day.